During the holidays, the crypto market moves very different as it does throughout the entire year. The trading volume is thinner, the prices swing faster, and moves feel more dramatic than they actually are. For beginners, this period could feel confusing and very stressful. But here's the truth. During holiday markets, the smartest move is often not doing more, but doing less or something entirely different. Hi, I'm Kai and welcome to the Mindful Crypto Life. In this video, I'll explain why crypto during the holidays is risky for beginners, the most common mistakes people make, and how to approach this period calmly so you can enter 2026 with clarity and not regret. Now, why holidays are different for crypto? Crypto trades 24/7, but the people behind the biggest moves don't. During Christmas and New Year's, trading activity often drops significantly as institutions, funds, and professional traders step away. And when liquidity dries up, price becomes more sensitive. This creates what we call a thin market. And in thin markets, even the modest buying and selling can cause exaggerated price moves, both up and down. You may also hear people talk about a Santa Claus rally. While December has been positive historically in some years, recent years have been far more mixed. Some rally and some don't. The key lesson for beginners is this. Holiday moves feel often bigger than they actually are, and many of them mean revert once normal liquidity is back around January. Another factor that beginners often overlook is token unlocks. Late December and early January tend to have scheduled large token unlocks, which increases circulating token supply. When this happens to low volume periods, they can add short-term selling pressure, especially on smaller or less liquid tokens. This doesn't mean that the project is broken. It simply means that supply dynamics matter more when fewer people are trading. Understanding this helps you avoid emotional decision-making during temporary volatility. This is where most beginners get caught. Mistake number 1 is panic selling during sudden price drops. Holiday dips often happen without any fundamental change, and many reverse once volume returns. Mistake number 2 is chasing pumps and using high leverage during thin markets. Low liquidity and high leverage is a dangerous combination. Mistake number 3 is forcing trades out of boredom. Fewer opportunities doesn't mean you need more trading activity. Mistake number 4 is ignoring year-end behavior. Many traders de-risk, take profits, and manage taxes before the year closes. Beginners who don't understand this often misread price actions. The takeaway is simple here. During holidays, doing less is your smartest move. As the holiday winds down and 2026 approaches, beginners don't need to rush into trading. The market is maturing. We're seeing more institutional participation, clearer regulatory discussions, stablecoin growth, real-world assets shifting on-chain, and deeper integration with traditional finance. Volatility is still here, but opportunities are shifting away from hype towards sustainable strategies. So during this period, you have 3 healthy paths: chill, earn, and learn. The first option is to chill or protect your energy. Chill means stepping back completely. Log off, spend time with your family, reset emotionally, and keep in mind that crypto is still here when January comes, and that many experienced traders are doing the same, having lesser trading activity during this period because they understand that thin markets rewards patience and not forced activity. Another thing to remember is that protecting your mental clarity is already a win. Your option number 2 is earn. Low maintenance and no overtrading. Earn means letting your assets work for you without checking the charts. For beginners, this often look like passive strategies, holding core assets, taking tokens, and parking assets on earned products. Yes, yield change and nothing is risk-free, but compared to trading holiday thin markets, passive approaches can be more sustainable sustainable and less stressful. And the third option is learn. And this is the most underrated move. Most beginners underestimate the power of learning and overlook that it's the most powerful one. As we move towards 2026, education matters more than ever. Start with your fundamentals. Understand how the blockchain works, the differences between proof of stake and proof of work, your hot wallets, your private keys, and how security actually function, whether it's in a SEX or a DEX. Focus on core assets, Bitcoin as a long-term store of value, Ethereum and smart contracts, stable coins for stability, and major layer ones like Solana, for example. Learn market structure, how centralized exchanges and decentralized exchanges work. What does liquidity means? And why crypto moves differently from stocks. Now, this is your non-negotiable, your risk and psychology. This is the most important skill. Never risk more than 1 to 2% of your entire portfolio in a single trade. Avoid using high leverage so early on in your trading journey. Use stop losses thoughtfully and not emotionally. Always keep in mind that most traders lose not because they lack strategies, but because they lack discipline. And for beginners, simple beats complex. Dollar cost averaging into core assets, spot trading only, passive income over constant activity, and try to avoid advanced strategies and advanced trading till you truly understand what risk is. And if you just really want to practice a new trading strategy, you might as well check paper trading or mock trading. It works just like real trading, except you're trading with fake funds or fake money. Now, let's talk about what to expect as January 2026 approaches. January often starts quietly, and volume may remain light at first, and some holiday effects could still linger. But as institutions return, portfolios rebalance, and structure gradually comes back into the market. Going into 2026, themes like regulation clarities, stablecoin adoption, and real-world tokenization is becoming more concrete. If you protect both your capital and your mindset during the holidays, you will enter January with a clearer thinking and better positioning. So, here's the takeaway. You don't need to win December to succeed in 2026. You just need to avoid unnecessary mistakes. Whether you choose to chill, earn, or learn during this season, the goal remains the same. Enter the new year with clarity, patience, and a plan. And if this video helped you, subscribe so more beginners can find a calm and practical guidance. And let me know down in the comment section below whether you chose to chill, earn, or learn, or maybe a combination of a few. Anyway, enjoy your break and protect your capital and your mindset, and I'll see you on the next one.